Welcome to the next weekly outlook, everybody. Over the weekend, we got some news about a potential meeting between Putin and Biden, talking about what's going on with Ukraine and try to ease the tensions around that. But this morning, we get an update that there are no concrete plans for that just yet. And so obviously, over the weekend, as that news came out about potential talks, easing down the tensions around Ukraine, and if Russia does not invade Ukraine so far yet, we start to see a little bit of more market calmness as soon as the market opened up yesterday. And then obviously today you had a lot of consolidation happening given that it was a market holiday for the New York session. And then now this morning we saw some news coming out saying that there's no concrete plans for that summit just yet. And we start to see that market fear starting to build up a little bit more. And you will see that on the technical side when we move on with Stefanos in a little bit. So that was one of the first news. I was kind of showing us that little bit of consolidation in the markets, but also this fluctuation of market fear and then also calmness that we have been seeing with a lot of pairs and a lot of assets in general. To add on top of that, we saw news coming out just a couple of hours ago saying that Putin is recognizing the Ukraine separatist republic. So what the separatists are, this is a military group that has been recognized as a terrorist group by Ukraine. And these are unofficially backed by Russia. So initially Putin came back and he's like, first he declined to comment on it, and then he failed to recognize them. And then we got an update about after an hour or so saying that Putin officially recognizes the self-proclaimed separatist republics that Russia backs in eastern Ukraine. So that is obviously increasing the tensions that we're seeing in the market. So at the moment, this is what the market is reacting to the most, the tensions between Russia and Ukraine. And also we're starting to see some more news coming out, which is building up this market fear back up again coming into the new week. So we want to watch out for any sort of news that's coming out, because that's heavily what the market is going to react to, especially if you're trading any pairs that have safe haven currencies in them, or even if you're trading gold or oil, anything that's a safe haven commodity as well. And so what we're starting to see on the UK side now is a little bit of more optimism as UK's Boris Johnson ends COVID rules in England. So over the weekend, we saw some news coming out about, for example, the Queen being hospitalized because she tested positive for COVID-19. So among all of this that's happening, we're starting to see a little bit of more optimism from the sense that now these rules are ending in England, which is going to give a significant boost to the Prime Minister. The universal and free availability of coronavirus testing is going to end from April 1st. So we're headed towards that date, pretty much bring in a little bit more optimism. So that's what you're going to see the market reacting to going into the new week. And then also as we're headed towards April 1st. So restrictions are obviously not the most ideal for any economy. We've seen that happen in the past 2 years or so. Every time there's news about restrictions easing up, we have seen the market react pretty well to it. And now that we're getting into this phase of learning to live with COVID and those restrictions, especially businesses, consumers, governments, now we're starting to see that restrictions are also being lifted, but that does not necessarily mean that the cases are dropping as well. It just means that, we're starting to see more variants that are not as deadly as the initial ones, right? And also now we're starting to see the healthcare system not being so much more overwhelmed as it was from the previous variants. But now we're starting to live with it, and we're starting to see the restrictions coming back down and everything like that. Now moving on to the economic calendar side, so quite an easy start, right? So when the market opened up, there wasn't much going on in Asian session yesterday. Today in London session, that was the most exciting session so far, given that we had some PMI data coming out from the Eurozone, and then also some GBP flash manufacturing and services PMI. It was a bank holiday, so obviously the markets didn't do much. And then going into the pre-London session, in Asian session and pre-London session, again, not much coming out. So today is quite an easy day. If you're going to be looking for any sort of moves in Asian session or even in London session, you're probably going to be just trading some technical moves. So there's not much happening from a fundamental side. Then going into New York session tomorrow, it's getting a little bit more exciting when you have the manufacturing and services PMI. Again, these moves will be reflected on lower time frames like the 15-minute, 30-minute, but the higher time frame structure is still going to maintain. So you want to pay attention to those and making sure that you're catching trades that are in line with those higher time frame trends. And then going into the Asian session, pretty much all you have coming out is the interest rates from the New Zealand. So you're going to be, if you're trading the New Zealand dollar, that's what you want to pay attention to. But again, not much else coming out because tomorrow is a bank holiday for Japan. So the banks will be closed. And then going into Wednesday, again, not much coming out in London session or even New York session. So if you're going to be trading anything, it's all going to be technical moves. So you want to make sure that you're waiting for your trade confirmations prior to entering any sort of trades. Thursday, you have the prelim GDP coming out in New York session. So not much again in London, besides Governor Bailey speaking, which is right when the market opens up the New York session, that overlap. So you have Governor Bailey speaking, and then you also have prelim GDP coming out. And as every Thursday, you have unemployment claims coming out. After that, everything kind of eases down. So it's quite an easy week so far when you look at from a fundamental perspective in comparison to whatever happened last week, right? We have some nice economic data coming out. And then Friday is going to be very important because you have core price index coming out, PCE coming out. And this is very important because this is pretty much your CPI minus the food and energy. So this is pretty much everything, like the expenditures and everything that the consumers themselves are consuming, right? The goods and services that the consumers are consuming. So this is what you want to pay attention to, because this also goes right into the decision making of the Fed or any other central bank. Pretty much, this is what you want to be paying attention to, because this tells you exactly how much are you paying, or the consumers are paying, for the goods and services that are not including food and energy. And if it's not much of a difference, then that tells you that food and energy prices are the outliers. They're the one who are kind of shifting to one side or the other. Other than that, quite an easy session for Friday as well. And then you have consumer sentiment coming out. So it's an easy week from a fundamental perspective. The emphasis still remains, the eyes still remain towards Russia and Ukraine, because that's what the market's reacting the most to.
All right, so let's break down the chart on GJ. We're gonna move through this quick because I think most of you guys are pretty much regulars and you know how these higher time frames are setting up. So obviously we've been in this multi-year downtrend over here, right? Since the crash of 2008, we came down, held support over here. We entered that market recovery around 2012, 2013, held support around 120, and then we had that market recovery bringing us all the way back up to 195, right? Until what happened over here? We had Brexit. Right. So once you announced Brexit, we came all the way back down, never broke the lows from 2008. Right. And then we had a small market recovery before we retested the lows over here. And then what happened in 2020 was our COVID-19. We ended up holding support right over here, never broke the lows again after with COVID-19. We never broke the lows from the 2008 market crash. We've been in a complete market recovery since then, coming back up to retest the recovery from Brexit. Right. 156. Key level, which we're gonna mark off in a second. But as you guys can see, we've been in this bullish trend that I'll mark off right now since March and April of 2020. So looking over here, we're gonna mark off 156, nice and simple, because the main thing that you guys want to be looking at is this range right here and what we're sitting in right now. It looks like we're rejecting 156. It looks like we're coming back below it again, which is going to be a big deal if February closes below 156 again. And again, that's for multiple factors of what's going on in the world. The Queen of England getting COVID, do you think that's affecting it too much?
I don't think that's a major concern, because now people are, like I said, they're learning to live with it. But again, when we're tapping into these key areas, the main thing to look out for is in the next 7 days, is February going to close at 156 or above it? As long as you're able to maintain that bullish sentiment, which is going to lead us right into March, and then hopefully seeing if Bank of England is actually going to increase interest rates or not. If that happens, then we could maintain that bullish sentiment in the market and continue pushing above 156. But I think the key thing is not being able to break below the previous monthly lows.
100%. And, based on that as well, Japanese yen, with a lot of fear in the market, like we said, the main focus is Russia, Ukraine. Everyone having fear in the market, they're going to be pouring money into the Japanese yen as a safe haven currency. So that's what's driving GJ down a little bit. We keep rejecting it. We've rejected it 5 months in a row. It looks like this is going to be the 5th month in a row right now. We may be rejecting it, but the month's not over. It's only the 21st. So we'll see if we get some kind of retracement. Maybe we're just creating that top wick right now, and then we could retrace right back up to like 157, hold resistance at 157. But that reminds me, I'm going to mark off 158 and 157 over here real quick. All right, looking at the weekly over here, as you guys could see, we ended up holding support over here. We'll break down the anatomy of these candles as well. We retested previous candle body highs, previous resistance over here, ended up holding support, also holding above these EMAs if you pay attention to those. But you're looking at a nice rejection after a strong bearish close, but barely a bottom wick, right? You get this rejection, nice clean bullish candle, clean rejection at this level, and then you get a really nice candle filling that wick with a wick to fill, which ended up getting filled. If you guys remember 2 weeks ago, we ended up opening the week pretty bearish right over here. It looked like we were going to reject 156 and maybe drive down to then drive back up, but we ended up flipping bullish in the beginning of the week and then retesting 158 with the increase in rates. Right now, well, this is the whole increase in rates, but right now, after retesting 158, we're now rejecting 157 over here, which your candle body closes a previous resistance over here. So 157, 158, very critical levels. Now, right now, again, with the anatomy of the candles, lower highs are being formed right now. And this current weekly candle, it's Monday, beginning of the week, we're flipping bearish. So can we be filling some of these wicks over here if we break 156? It's all you really got to know right now on the weekly, right? We're rejecting 157, creating lower highs on the weekly, and now flipping bearish on the current weekly in the beginning of a week.
And this
Look
is
at,
where the fundamentals are very important because when you look at last week, we closed like a doji with still a bearish doji, right? So still that little bit of market fear, uncertainty of what's going on. Like Stefano said, the money flowing in into the Japanese yen, and that's really what's moving the pair at the moment, more than anything what's happening in the UK. Obviously, that's still, something in the background that you need to keep in your mind. But right now, you want to pay attention to more of the Ukraine and Russia issue because that's what's really moving the market. So that's something that you want to pay attention to this week as well, because if we just end up fluctuating in the range that this candle is making at the moment, then we may just end up with a weak bearish or even a weak doji candle close like last week.
hmm And like one point when it comes to technicals over here and studying the anatomy of the candles, we always talk to you guys about like having a checklist before you enter trades. One thing that you want to do is again study the anatomy of the candles before you take a trade. So picturing this as the 30-minute, you see healthy candles pushing all the way back up to retest the high after holding support, right? But guess what? These candles start getting weaker, right? This candle again creates that lower high, but with a doji candle, but still above 156, like this candle closed above 156. Now another lower high. Now it looks like we're getting very weak over here. Could we start driving down back into this range below 156? And looking over here at the current daily candle, again, lower highs, rejecting 157. And what you see over here, I just want to break down some of these candles here. We closed above 156 over here, right? Nice clean close above. We come right back below it, holding a support in here, but then we end up closing with this candle above this level right here. I'm going to point this out in a second. This candle closes above. We reject this level by closing above with this bearish candle. It closed bearish, but it closed above that level. And then we just drove right up to 158 with this candle right over there from that level. This candle ends up rejecting that level again. We get a doji at that candle, held support, pushing back up to 157. We're starting to flip bearish and flip below 150, 156, 500 is that level. Or actually it's, give me 1 second. That level would be like 280, 270, 280. That sounds familiar. So, and again, creating lower highs over here, lower lows. We're filling these wicks over here, but now we're approaching 156. As you guys know, is a very significant monthly and weekly level. So you guys may want to be careful in here, especially with these wicks, because obviously these wicks are supports on the lower time frame. So we need to break that. Where's our next target though? It's going to be somewhere in here where you have these wicks. We'll just make like a horizontal line at 156 or 155, 500. And that could be our next target if we do end up closing below 156 today, right? We can end up coming down here. You also have these wicks, which we can take a look at in the lower time frames, and obviously a support right over here.
You guys want to pay attention to how similar this price action is compared to what happened previously. So exactly where Stefano's marked off, that's where I would narrow in into my consolidation. Right into this area. So this is all consolidation. And then you have the next current daily candle making a top wick and pushing down, pretty much grabbing that liquidity, right? And that's the same exact stuff that happened here. So if you look at the two and you're looking at, well, how do I catch this move that's happening down here? Or how do I catch the one that's about to come up? Just study whatever happened back here. Obviously wait for a candle close, below outside of that consolidation right here, and then wait for some sort of a retest and then continuation down. If you get fundamentals are supporting, increased tensions and stuff, maybe you won't even get a retest. So you wait for this candle to close in the next 2.5 hours. Given that it closes at 156 or below it, the next candle could just continue down, and then you look for your confirmations on lower time frames.
It's a great point. It's a great point. Just studying the history in the back of the chart over here, the same exact thing could happen, just like over here happened, right over here. Right? Very similar price action over here. So I'm going to make this really easy for you guys so that you guys don't get your accounts in any trouble. You see this right here? You're just going to do this and you're not going to touch it. And what you're going to do is you're going to wait for something like this, where you have a clean move right up to this area, at least on the 4 hour. You got to see what the lower time frames look like. And then you got a nice clean move once you break 156. So anything between 156 and 157, just don't touch.
Yeah, so I mean, I'm pretty sure I said this in the last video too, but you could take a trade anywhere, honestly. Like you could take trades in consolidation. The hardest part and the reason why we tell people to stay away from it is because a lot of people have not perfected their risk management, or they don't understand the limitation of your trade, right? A lot of people, they see the price moving and they think they see the volume kicking in just because the next candle started forming without a top wick or a bottom wick, very early on. And they think like, okay, well, price is going to move in my direction. And they end up turning a winning trade into a losing trade. So again, you could take a trade in a consolidation, outside of a consolidation, it doesn't matter, but you need to be able to perfect your risk management and know the limitations of your trade. So if you know, and be truthful to yourself, if you know that your risk management is not, you're not the level that you want it to be at, or you have a problem of, let's say, FOMO or over trading, over risking, being greedy, all that type of stuff, just don't take a trade in consolidation. Save yourself from it. Instead, go back and study at paper trade and do all that type of stuff to understand how do you get to the level of being able to trade in consolidation for those quick pips.
Yeah, that's one thing that you say all the time too, understanding the limitation of your trade. And that's one thing that you guys want to write down too. Understanding that and practicing that when you're back testing. Stay out of this whole range. Actually, it looks better on the 4 hour. Just a quick recap. Stay out of here. Wait for the break and retest on either side. Over here, probably going to be coming down here. This is probably going to be the main move over here. We get a nice clean move, nice clean candles over here that you could be mirroring and grabbing the volume back down to 155.500. After that, we'll break that down at another time, but just stay out of this. Moving over to gold, very bullish February candle right here. A lot of fear in the market. Right now, I'm just going to mark off this trend that we've been respecting over here since 2019, and we're going to mark off a few levels. Again, really quick, we got 1680. I'm not even going to really put the exact number in there. We got 1750 over here. We have 1830 that I always mark off over here. And then we got 1900, which we're now retesting. And then we have 1917, which is this next wick, our next destination over here that we could be breaking or retesting once we close above this level on the lower time frames and continue up. Right now, we get some fear in the market. Again, everything has to do with Eastern Europe and what's going on over there. That's the main mover of gold right now. Now, next month, it may be a different story with the Fed increasing interest rates. Now, if that happens, we're going to reject this area up here, and then we may be driving down, especially if Ukraine and Russia, don't have any tensions anymore. They kind of calm down, but I don't know if I see that
As
happening.
long as they have talks and they're able to schedule talks. For example, right now they're saying that they haven't even scheduled a concrete date for a summit. If they're able to do that, obviously that puts in the sentiment in the market that, hey, things are starting to ease up a little bit. They're willing to talk over it. That combined with increased rates from the Fed or even from Bank of England, all that type of stuff is going to help with that retracement from 1900. But clearly 1900 is an area of liquidity from the monthly, weekly, even if you go up to the quarterly timeframes. I use that for my personal analysis. But if that's something that you use, then you can check that out too. But 1900 is an area of liquidity. You see a lot of consolidation. You see a lot of wick rejections. This is where you need to pay attention to fundamentals.
So current weekly candle is bullish. Daily candle, again, after that report coming out in this afternoon, we can mark off 1870. Right over here is this previous resistance, previous support, previous resistance over here, right? Previous resistance. Doesn't look like it's going to be coming down here anytime soon. But right now we are rejecting 1890 and starting to drive back up above 1900, right back up to 1917, which is, again, that wick over here. Now you have this area, 1908, that we could be reaching. So I'm just going to mark off this real quick as well. And that's kind of where that wick almost ended up. Looking at the 4 hour, now it looks like we're driving up. We're starting to reject this area. The same exact thing. I'm going to adjust that over here. And then we can mark off 1900 again as a very psychological number, very key area on the higher time frames too. So it was the same exact thing we did with GJ as you're doing with gold over here. And this makes it very simple for a lot of beginner traders too. This is what you're looking for. Clean moves to the left. Doesn't this look attractive? Not in here. And then also, we're breaking up and we're continuing right back up to 1908, 1909. You have this wick to fill over here as well. I know we just did a little retest and it looks like we're still heading back up. Again, a lot of fear in the market right now. So maybe we get a close over here on the 4 hour. We could be coming back down to retest this area. But we are exiting with this candle right now, which is good.
Yeah. So essentially, before we hop onto like a lower time frame, what you want to see here, I'm going to annotate real quick, is so you want to see this current candle closing above this area. At the very minimum, since this is all of this is a 4 hour consolidation you're breaking out of, at the very minimum, sounding like a broken record at this point, but you need the fundamentals to drive this, right? So if you want to look for any sort of buy opportunity, let's say this candle closes exactly how it is, you want to see at least a bottom wick rejection, right, into these areas, and then a continuation up from here, breaking the previous highs and then moving up. What that should look like when you drop down to lower time frames, like the hourly or anything like that, is you need to see, let's say, some sort of a top wick, or maybe you don't get a top wick, but a bearish candle close. One or even two, let's say you get two coming down here, holding a clear support and then pushing back up. As that candle breaks the highs, that's your entry, and then your stop loss being below this. I think that's where a lot of people get mixed up. When we talk about that bottom wick retest and then continuation up, they're not really sure exactly what they're looking for. So hopefully this kind of breaks it down for you. Exactly what kind of setups are you looking for on those lower time frames?
Yep, absolutely.
But if you get a break and retest on the 4 hour, even better, because that gives you confirmation of continued moves.
The higher the time frame, the stronger it is.
Yep.
So right now we're looking at this wick right now on the 4 hour, which could be a resistance on the higher time frames, which I know it is. We got a clean move to the left over here. Looking at the hourly, we're now retesting this high up here.
If you're hourly 4 hour consolidating, your 30 minutes not really going to look anything different. So make sure you guys are looking out for that in these trade opportunities, especially like I said today, you probably have Asian, you have London, but all of that is going to be purely technical moves, right? Because there's not anything else coming out from an economic data perspective, unless you get more news about Russia and Ukraine.
Guys, have a great week. No over trading, no over risking. Be smart, make smart decisions. That's all it comes down to, and that's all your trading is. That's all your account is. It's just accumulation of good decisions and smart decisions, especially with managing risk and the trade selections that you guys actually select. So just have a smart week. If you guys need any help at all, please reach out to either of us. We'll be happy to hop on a Zoom, and we will see you guys. Wednesday morning.
Wednesday. Yep. Yeah. See you guys on Wednesday for the live session.
All right, guys.